Now we will do a journal entry problems, and it's related to stock options. January 1st, 2024, Nicholas Corporation granted 10,000 options to key executives. Each option, the executives will be able to purchase a share which has a $5 par value, and they can purchase the stock at $20 per share. Options should be exercised within 2 years period beginning 2026. That means here the service year will be 2 years, and then options will be expired after 2 other years. So now here the granted NICS stocks were trading at $25 per share, and they did the option pricing model. They determined the value of the options that they granted to the executives, and based on that, total compensation amount will be $400,000 that we will record over the 2 service year period. Now after the service years, May 1st, 2026, those executives exercised 8,000 options. That means they bought 8,000 shares at $20 par price, which has a $5 par value. And that time stock was traded at $30 per share, which really makes sense that they can purchase the stock at a lower price and they can sell it at a higher price and make money. Now the remaining options lapsed in 2028 because those were not exercised. Now we have to do journal entries. First, let's do the journal entry on January 1st. January 1st, 2024, options were granted. Remember, when we do the stock option compensation plan on the granting date, we do not record any journal entry. We just determine the compensation expense. So here you can write it down, no entry. Then what we do, based on this compensation expense amount, we actually recognize it over the service year. So we have 2 service years, 2024 and 2025. So at the end of each year, we will recognize the compensation expense. So we'll have and have. So December 31st, 2025, we will debit compensation expense, and then we will also show that part in our capital. So we will credit paid in capital, and we'll also label it, this paid in capital is for stock options, and the amount will be 50% of it because we are recognizing it over 2-year period. So it will be 200,000 and 200,000. Then next year, at the end of 2026, December 31st, 2026, we will do the same journal entry, compensation expense debit, the rest of the other 50%, and paid in capital credit, and you can also label it's for stock options, 200,000. Now look at that, at the end of 2 years, your paid in capital stock option amount will be 400,000. Now on May 1st, we have to record the option exercise. Option exercise means employees purchase the shares at $20 per share. So how we can record it? The employees will receive those stocks and the company will receive the cash. So next entry will be on May 1st. So let's write it down. May 1st, 2026. Sorry, this will be 24. This is 25. So we will record the exercise of the option. So the company will receive cash because each share they sold those 2 employees for $20. That was the exercise price, and they exercised 8,000. So that means 8,000 shares were sold to those employees. Each share price $20. So the company will receive $20 times 8,000, 160,000 here cash. And we have to remove that 8,000, which is 80% of our paid in capital stock option balance. So currently you see paid in capital stock option balance here, credit balance will be 400,000 at the end of 2025. So we have to eliminate 80%. Eliminate means now we have to debit this account. So we will debit paid in capital stock option, and we will calculate the numbers here for 80% of, you remember the total amount is 400,000. So we will take 80% of it. So we're gonna debit 20,000. Now what will credit? We will credit the stock issuance. So first, common stock that we will record as per the PAR par value, which is $5. So 8,000 stocks were issued, PAR par value, which will be $40,000, and the remainder we will record or credit as additional paid in capital or paid in capital in excess of par. And the remainder, if you see here, debit side 160 plus 320,000, and if you subtract 40,000, so the remainder we're gonna credit as for 40,000. Now what happened here? At the end of 2027, the exercisable period finished, and then January 1st, 2028, we have to record the lapse of the remainder or 2,000 options. So currently that option is remaining as paid in capital stock option. So we will just recategorize it. We'll eliminate it from the stock option category, and we will now put it as expired stock option category. So January 1st, 2028, we will just debit paid in capital stock options. And you already know that the remainder 20%, there are several ways. You can take 20% of 400,000, or you can take the difference 400,000, and here we debited 320,000, so it will be 80,000, and we will still keep it as paid in capital, but we will now here label it as expired stock options. Expired stock options, and the amount will be 80,000. This is how we will do the journal entries for stock option compensation.